Introduction. Have you ever imagined a world where money is entirely digital? Where banks and governments have no control over how you spend or receive it? That world exists and is growing every day. Today, we'll dive into the universe of cryptocurrencies and discover how they are shaping the financial future of the planet. But what makes cryptocurrencies so revolutionary? Let's find out. Cryptocurrencies, with Bitcoin leading the way since its emergence in 2009, are essentially digital currencies that operate based on a technology called blockchain, which ensures security and transparency without the need for intermediaries. Unlike traditional money, they offer advantages such as anonymity in transactions, lower fees, and global accessibility without the need for bank accounts, making them particularly attractive in less developed regions or for those who prefer to maintain financial privacy. However, despite these advantages, cryptocurrencies face significant criticisms and challenges. Their volatile nature can be seen both as an investment opportunity and a risk, and the lack of clear regulation generates uncertainties regarding their legitimacy and long-term stability. Moreover, there are concerns about the use of cryptocurrencies in illegal activities, given the difficulty in tracking transactions. Looking to the future, cryptocurrencies have the potential to transform not just the global financial system, but also to foster broader financial inclusion. With the development of technologies such as smart contracts and decentralized finance, or DeFi, new forms of economic interaction are emerging, challenging traditional economic models and proposing a future where finance is more inclusive, efficient, and democratic. As we explore the fantastic world of cryptocurrencies, it becomes clear that we are just at the beginning of a financial revolution. With their ability to democratize access to capital and challenge traditional economic systems, cryptocurrencies could be the key to a more inclusive and efficient future. As the debate over their implications continues, one thing is certain: they are already redefining what it means to be money in the 21st century. Are we ready to embrace this change? History is still being written, so let's learn all about cryptocurrencies while there is still time, because we are part of it. What are cryptocurrencies? Cryptocurrencies are forms of digital money that operate without the need for a central authority, such as a bank or government. Instead, they use a technology called blockchain, which is a public and decentralized ledger of all transactions that occur within the network. This technology ensures that all transactions are secure, transparent, and immutable, providing a solid foundation for the reliable use of this digital currency. The most well-known among cryptocurrencies is Bitcoin, which was introduced in 2009 by a person or group of people under the pseudonym Satoshi Nakamoto. Since then, many other cryptocurrencies have been created, including Ethereum, Ripple, Litecoin, and many others, each with its own characteristics and specific uses. Some, like Ethereum, not only process financial transactions but also execute smart contracts, programs that operate automatically under predefined conditions, thus expanding the potential of cryptocurrencies beyond simple monetary transactions. What distinguishes cryptocurrencies from traditional forms of money is primarily their decentralization. There is no single entity that controls the network, making cryptocurrencies resistant to common problems in centralized systems, such as fraud or censorship. Additionally, anyone with internet access can participate in the cryptocurrency network, whether to carry out transactions or to contribute to the process of verifying these transactions, known as mining. This process involves solving complex mathematical problems to validate transactions and add new blocks to the blockchain, a task that not only ensures the security of the network but also generates new units of the cryptocurrency as a reward for those who perform this mining. This combination of security, transparency, and accessibility makes cryptocurrencies an attractive and innovative option in the financial field, allowing a new way of thinking and interacting with money in the digital age. History and evolution. The history of cryptocurrencies began with the publication of the Bitcoin white paper in 2008 by a person or group of people using the pseudonym Satoshi Nakamoto. Bitcoin was launched as a direct response to the global financial crisis of 2008, proposing a form of money that could operate outside the control of governments and centralized financial institutions. In January 2009, the first block of the Bitcoin blockchain was mined, and with it was born what many consider the world's first decentralized digital currency. The fundamental innovation of Bitcoin was its underlying technology, the blockchain, which ensured secure and transparent transactions without the need for a central authority. This feature not only attracted a user base that valued privacy and financial autonomy, but also inspired the creation of numerous other cryptocurrencies. In the following years, various other digital currencies were introduced. Ethereum, for example, was developed in 2015 by Vitalik Buterin and brought with it so-called smart contracts, which expanded the use of blockchain technology beyond financial transactions, allowing for the automation of agreements and the creation of decentralized applications. This innovation opened up new possibilities for blockchain technology, extending its potential impact on several industries beyond finance. Other cryptocurrencies, such as Ripple, Litecoin, and Cardano, were also developed, each offering different improvements in speed, energy efficiency, or functionality. Compared to Bitcoin, these currencies helped shape the crypto asset ecosystem, bringing new options and solutions to the challenges faced by the first generation of cryptocurrencies. The evolution of cryptocurrencies was not limited to the development of new coins. The infrastructure around these coins also grew significantly. Cryptocurrency exchanges, digital wallets, and custody services were created to facilitate the safe buying, selling, and storage of crypto assets. Additionally, over time, the integration of cryptocurrencies with the traditional financial system became more robust, with Bitcoin futures being traded on major financial exchanges and publicly traded companies investing significantly in cryptocurrencies as a reserve asset. Today, cryptocurrencies continue to be an area of rapid development and innovation, representing an increasingly significant part of the future of money and global financial transactions. With growing interest from institutional investors and recognition by governments around the world, cryptocurrencies are progressively moving into the financial mainstream, promising to redefine our relationship with money even further. Advantages of cryptocurrencies. Cryptocurrencies offer a number of advantages that significantly distinguish them from traditional monetary systems. First, they promote a high degree of anonymity. While the details of transactions are public on the blockchain, the identities of those involved in these transactions are protected. This allows for expanded financial privacy, attractive to both individuals and businesses that value confidentiality over their economic activities. Another significant advantage is security. Cryptocurrencies operate based on advanced cryptography and blockchain technology, which records all transactions securely and immutably. Once a transaction is added to the blockchain, it cannot be altered, drastically reducing the possibilities of fraud and double spending. This reinforced security is complemented by the fact that cryptocurrencies are decentralized. Unlike traditional currencies, which are regulated by governments and large financial institutions, cryptocurrencies are distributed among all users of the network, which disperses risk and diminishes the influence of any single entity. In addition, cryptocurrencies are globally accessible. They can be sent or received by anyone, anywhere in the world, who has access to the internet. This democratizes access to money, especially in regions where banking services are limited or non-existent. Such accessibility also implies significantly lower transaction costs. International transactions, for example, can be conducted with minimal fees and without the need for intermediaries, such as banks or money transfer services, which typically charge high fees. The speed of transactions is another notable feature. While traditional international money transfers can take days to be processed, cryptocurrency transactions are usually completed in minutes or even seconds, depending on the cryptocurrency used. This not only improves the efficiency of commercial and personal transactions, but also provides vital speed in emergency financial situations. Finally, cryptocurrencies offer potential for innovations in the field of finance. With the introduction of smart contracts and other functionalities provided by platforms like Ethereum, new methods of conducting business and new forms of financial services are emerging. These innovations have the potential to transform entire sectors, simplifying processes, reducing operational costs, and creating services that are more accessible and customized for end users. These benefits illustrate the transformative potential of cryptocurrencies, not just as an alternative to traditional money, but as an evolution in the way we interact and conceive of monetary value in the 21st century. Future impact and potential. The future impact and potential of cryptocurrencies are vast and multidimensional, promising to transform not only the financial sector but also various other aspects of global society. As blockchain technology matures and more people and institutions adopt cryptocurrencies, we can anticipate significant changes in how money is perceived, used, and managed. One of the most promising impacts of cryptocurrencies is the potential democratization of access to capital. In many parts of the world, especially in developing countries, access to banking services is limited or non-existent. Cryptocurrencies can provide these populations with a way to participate in the global economy, offering a means to store value and conduct transactions without the need for a bank account. This not only helps reduce financial inequality but also empowers entrepreneurship and economic development in previously marginalized areas. Moreover, the decentralized and secure nature of cryptocurrencies has the potential to significantly reduce fraud and corruption. With transactions permanently recorded on the blockchain, it is much harder for individuals or groups to manipulate, hide, or alter financial records. This could have profound implications for everything from international trade to disaster relief distribution, where transparency and reliability are crucial. Additionally, the development of smart contracts and decentralized finance, DeFi, opens new avenues for automation and efficiency. Smart contracts can be programmed to execute automatically when certain conditions are met, without the need for intermediaries. This not only saves time and money but also increases security and reduces the possibility of human error or manipulation. Decentralized finance is already beginning to challenge the traditional model of financial services, offering products such as loans, insurance, and investments that are more accessible and flexible than those offered by traditional financial institutions. However, the path to mass adoption of cryptocurrencies still faces significant challenges, including issues of volatility, regulation, and public acceptance. Nonetheless, with more and more businesses and governments exploring and adopting these technologies, the future of cryptocurrencies seems not only promising but also inevitable. They have the potential to redefine money, transform financial systems, and even reimagine how governance and public policies are conducted around the world. As we move forward into this future, cryptocurrencies continue to be a vibrant field of innovation and experimentation, where the potential to shape a fairer, more efficient, and transparent world is immense. With technological advancements and growing acceptance, they have the potential to become an integral and revolutionary part of the global financial infrastructure. Challenges and criticisms. Cryptocurrencies, while offering many advantages and revolutionary potential, are not without significant challenges and criticisms. One of the main obstacles faced by this technology is its price volatility. Currencies like Bitcoin and Ethereum can experience large swings in value over short periods of time, which can be attractive to speculators but represents a substantial risk for those looking to use them as a stable form of money. This volatility is fueled, in part, by speculation in the market and uncertainty regarding the future adoption of these technologies. Another point of criticism is the issue of regulation. Cryptocurrencies operate in a gray area in terms of financial regulation. Different countries have approached the issue in various ways, with some adopting a more open stance and others imposing severe restrictions or even complete bans. This lack of a uniform regulatory approach creates uncertainties, both for users and investors, and can limit the widespread adoption of cryptocurrencies as a legitimate means of payment. Moreover, cryptocurrencies face concerns related to their use in illicit activities. Due to the relative anonymity that some cryptocurrencies can offer, they have been associated with criminal activities, such as money laundering and terrorism financing. This negative association further complicates the efforts to legitimize cryptocurrencies and increases the pressure for stricter regulations. There are also technical and scalability challenges that need to be overcome. Cryptocurrency networks, like that of Bitcoin, face limits on the number of transactions they can process per second, which can lead to delays and higher fees during periods of heavy traffic. These limitations are a significant hurdle to their adoption as a viable alternative to conventional payment systems, which can handle much higher transaction volumes. Finally, there is growing concern about the environmental impact of cryptocurrency mining, which requires a large amount of electrical energy. The mining process, especially for coins like Bitcoin, is energy-intensive, often relying on non-renewable energy sources that contribute to carbon emissions. This environmental aspect of cryptocurrencies has led to questions about their long-term sustainability, especially in a world increasingly concerned with climate change issues. These challenges highlight the need for continued innovation within the cryptocurrency space and for constructive dialogue between developers, users, regulators, and the general public to ensure that its development can continue safely and responsibly, maximizing its benefits while minimizing potential risks and harms. Conclusion. As we explore the fascinating world of cryptocurrencies, it becomes clear that we are witnessing just the beginning of a financial revolution that promises to reshape our way of interacting with money. Cryptocurrencies are not just a technological phenomenon, they represent a fundamental shift in the power structure of finance, offering a decentralized, secure, and transparent alternative to monetary systems controlled by government entities and large financial institutions. With the ability to democratize access to capital and challenge traditional economic systems, cryptocurrencies could be the key to a more inclusive and efficient future. While the debate over the implications of cryptocurrencies continues, one thing is certain: they are already redefining what it means to be money in the 21st century. With each innovation and adoption, cryptocurrencies are gradually moving from the niche of technology enthusiasts to a more central and influential component of the global economy. This is a crucial moment in financial history, where advancements in blockchain and cryptocurrencies have the potential to offer solutions to many of the issues plaguing our current financial system, such as financial inclusion, transaction efficiency, and data security. We stand before a transformative potential that, if fully realized, could alter the global payment infrastructure and beyond. Cryptocurrencies challenge traditional conceptions and pave the way for a broader exploration of new possibilities that can benefit individuals and societies worldwide. Thus, as we continue to navigate this uncharted territory, the importance of careful and considered regulation becomes imperative to ensure that the potential of cryptocurrencies is realized without compromising financial security and stability. Therefore, as we look to the future, not only must we consider how cryptocurrencies can be safely and effectively integrated into our current financial system, but also how they can serve to create a new system that is more inclusive, efficient, and attuned to the needs of a globally interconnected economy. The history of cryptocurrencies is still being written, and we all have the opportunity to be part of this exciting and transformative narrative.